Sound check 1 2 sound check 1 2. Sound check. Soundtrack on live. Soundtrack on live. Soundtrack on live. Sound check on live. Sound check on live. Hey, so welcome back everyone. Good evening. So how was it? How was the past trading day? I guess yesterday. So a lot of forecasts actually played out back on the forecast on Sunday. Indeed, let's have a look on the dollar index first. So as we can see, within this range, as I mentioned on the Sunday, within this range, either both highs and the lows will be swept. So since on the Monday itself, the price is sweeping the highs first, then decided to continue lower, and now you can see that price confirmed to continuing break lower. So where will it targeting to? At least this low or this low. And if the whole market structure close below this strong liquidity, it will just continue down all the way to here at the ultimate swing low itself. So this could be just the start of the short for the dollar index, but not too much of worry. We just trade what market give us want us to see. So second thing on gold, on the daily time frame, the Monday candle play out within this range. So what can we do, and how do we get involved from here? So since the previous daily high, so let me mark it out first. Let me mark it out first on the indications. Okay, so this is the previous daily high as the premium level. So this is the previous daily low. So from this previous day high and previous day low, in between it, at the previous day low is also a daily fair value gap. As you can see here, where is the daily fair value gap? Is right here, and there is a daily fair value area resting below. So this is how I usually outlook on my before I started my trading every single day. So at first from the weekly outlook, then we need to start from the monthly to weekly, because since it's almost the end of the month, by the time for the next coming week weekly outlook, I will be showing you guys that I've started the analysis from the monthly time frame itself. So okay, back to the point where how I analyze it on the intraday trading. I will need to indicate, find my bias, where are the price is going to head to. So the price did open right here. It sorry, mind me, it opened with a huge dump, and then in the end come to all-time a new all-time high, and then close here. And from today, the price did open here, but we still need to see whether the price is going to close above it or close below it. But from this standpoint of view, right, the price is respecting the premium levels where the previous daily high as stated as the premium level to short off. But since it's also an uptrend, we wouldn't want to just blindly short anything without any confirmation. So let's drop down to a 4-hour time frame. Okay, 4-hour time frame is also a clear indication on the daily time frame rejections of the highs itself. From the 1 hour, there is a perfect BPR shown in here, which is a strong sign reversal after taking out the previous daily high, coming back to a OTE level right here. Yes, indeed, price come back into the OTE level. Is also a premium area, and now price is seeking for a liquidity to continue it lower. So the price take at the OTE level. So currently they need a liquidity to take out the liquidity itself. So coming from the lower time frame, so now we see this was the first reversal standing, and now this is the second reversal sign, which we can see it from here. Actually, I am still waiting on the 9 o'clock comes, whereby I can see the 1 hour candle. That I want to see the 1 hour candle. If this candle close with a fair value gap, I want to see how strong is the momentum, how strong is the body closure, and if this is a potential 1 hour fair value gap of the first BPR. Okay, this is the potential one. So once I want to see is this 1 hour fair value gap has the potential to sting into it, a rejection from it. Maybe I draw a little bit more obvious. A sting in, a sting on it, true swing high form with a BPR inside this range, and then just dump continuing lower all the way to 613. Yeah, the previous daily low as the draw on liquidity, where our TP point. So this is the potential 1 hour fair value gap, but don't forget there is a 50-minute fair value gap resting right here as well. So price could also respect this 50-minute fair value gap if this high hold, this protected high hold. Eventually, it's also this protected high as well. So I want to see something like this to happen. Okay, I will just leave it here for the time being, and we will see how the forecast play out. From the Sunday itself, the price was at here. I did mention that price could just continue after after breaking this high, and especially this liquidity right here. If you don't believe, I think it's the pounds. Yes, the pounds. The price indeed is reaching its drawn liquidity right here, whereby I say on the Sunday itself, this high and the low is the liquidity line. So the Monday it sweep the high and going down all the way to this liquidity down here, and respecting the higher time frame fair value area. So the moment the price sink into the fair value area, it does show us the BPR right here, a strong reversal sign. So we could just get involved here. The moment the price break above, the price just break above and then retest from here, and you could do something like this. This is how we all enter and target to this draw on liquidity. It might take 2 days, but it's still definitely a good trade, of course. So from the euro itself, yes, the first thing is the price didn't break off this high. Let me check on the is this weekly. On the 4-hour time frame, okay, the price failed to continuing break higher, but retesting here. There is a strong 4-hour fair value gap right here. It looks like respecting with a very tiny, following with a very tiny 4-hour fair value gap right here, but the price decide to sweep this protected high. So if the price wants to continue going lower, what I would like to see is the price at least break the structure of here. Okay, wait, a sweep, yeah, at least here, a break of here on a 1-hour time frame, a closure below here, the draw on liquidity right here. Yes, if the price fail to break below here, it could just continue pump all the way to up here. All the way to up here. Since the price is respecting the fair value areas, the fair value gaps, this low, this high. Okay. Before, I don't think the 1-hour fair value gap is forming right now from the gold itself. Too bad, but this candle range high is a potential reversal as well, as long as this high didn't get violated. What I want to see is a sting in, yes, as mentioned earlier, right here, the sting in to at least this high if the price want to do a sweeps, because since this swing low is the nearest draw on liquidity, why not price just continue lower to take out at least this low? So now price is seeking liquidity. It need to be let more players to get involved. But how do we let the how do we have more buyers or sellers in the market itself? So the price need to offer fair values and target the swing low or high itself. JJ, is it draw fair value gap here? What do you mean like here? On which chart, which time frame? Maybe you can let me know, so I can show the rest of the people that they can see on the and learn from everyone else. Okay, very well. The dollar index is respecting the bearish, so I might expect a continuation bullish on this as well. On a Sunday itself, we do mention this swing low is the liquidity area that has been swept right here, but on the Monday itself, in the afternoon, there is a PMI news where price actually just manipulate the range in here and took us out as forecasted, but eventually price also respecting the bullish order flow until up to this weekly fair value gap. Okay, pretty well. New Zealand dollar is respecting the bullish order flow very well, as Sunday forecasted right here. Price just staying into it, the range, and broke at least this high and decided to continue the range itself. As forecasted, this high was respected. This fair value gap is also respected as well. So price could just continuing higher. It does took out the first draw on liquidity right here from the daily highs, and the weekly itself is the ultimate TP point. Okay, very well. It's 9 o'clock right here. So now the 1 hour candle close has closure below the range itself. So price could just continuing lower off to this low. Let's see. We just require a little bit of retracement and then dump all the way to this draw liquidity. Now let's see if the price respecting this level. Let me check again. Is there any news events for today? Okay, Monday is over. There is a consumer confidence for today about 10 p.m. Now we see this is a very crucial levels that price whether just continuing higher or respecting the premium levels or respecting the discount areas. So what do we do in here? We don't do anything, we just be patient and let the market tell us the answer. Okay, it seems the discount rate as respected. Okay, this range is very crucial. I want to see some real rejection of here. Staying in. Currently at this stage. Since we are just keep on waiting, right? Maybe I'll just touch on and resume the part where I just left off from the Sunday itself. So from the Sunday stream, we do touch on about candlesticks, market structure, and a little bit of PD arrays. So what are the PD arrays? Which is the premium and discounts array. So why does premium and discounts array are very important? Is premium every it's like a business. You are selling a product. You want to sell it at a high price, or you want to sell it in a low price. Definitely is a high price, of course. Secondly, the discounts. If you want to buy a stuff, do you want to buy for the product or at original price, $100, or you want to buy it at $50 discounts? It's the same thing. In forex market, you want to get involved in a buy orders as low as possible, but how low, this you need to depends on the analysis and the market structure itself. So from here you can see in a give me a second. So in a PD array, in a market structure, it requires a high. Maybe let me do an example for the bearish ones. A high, a low, a lower high, and it requires a lower low right now. If not, it will just break and continue to form a new low and new highs, and then just continuing upwards. But how do we know that is the price? No, if the price is in the premium or discount area, is depends on the, there is a tools right here. It's called Fibonacci retracement. Okay, what you can do is from 1 to 0 itself is the original price and the discount and the premium areas. So currently, as you can see, the price is in hovering around the premium areas. So but if since we want to do short orders, we want to make sure we are in the premium levels. But if we don't use this tool, how do we identify it? First of all, you need to see the premium area. I would like to simplify it, but definitely there is so much more things inside from the premium and discounts array. You can search in Google itself. So we would like to focus on one thing first. So in a premium, you would like to focus on the swing side. Okay, the second thing is the order block. Sorry, might need order blocks, and order blocks. Next thing is fair value gap, and the fourth thing is the breaker block. So just focus on these few couple of things first. It's in the premium array. The same thing goes to the discount array. For the discount array, it requires a low, an order block, a fair value gap, and a breaker as well. So what can we do here? We can do is at the swing high and swing low. I bet this is definitely easy. On the swing high and swing lows, you can see right here the swing highs. Okay, from this stretch to this stretch. Okay, what can you see? First of all, a low, a high, a lower low, sorry, a higher low, and the higher high, higher low, and then a higher high. But eventually, this low was broken. So the downtrend is excuse me. So the uptrend is over. Right here. The moment the price just broke here, the uptrend will, the market structure will temporarily be more bearish instead of bullish itself. So within this range is the new fair value area that price could respect off to be continued bearish right here, where the price just all the way down here but failed to break this low. So this is the swing high and swing low points. Okay, so this is the swing high and swing low points. Second thing, order blocks. Order blocks left in here after the swing high or lows. The range in here. Oh, sorry, mind me. This is the low. Okay, so this is the low as the order blocks, leaving with a fair value gap right here. Thirdly is the breaker block right here, where the market structure just broken off everything, every single thing. So this is the BB, fair value gap, and the OB. So now you can see where price actually it requires a swing highs, order block push off with this is the consecutive fair value gap overlapping with the breaker and the order block, which indicates the price indeed has the very strong intention that it want to goes to this direction. That's why the price just respected to these areas, to then continuing lower, but fail to break this low, which means this low is a protected low as well. So now we can see of the same thing. This is the bearish examples. So you can see from these swing lows, the price also did left with a order block and a fair value gap. Excuse me, I think this is the order block and this is the swing high breaker and leaving with a fair value gap. This was the first fair value gap form right here. And then where price push price into a premium, and then the equal seller to get involved in the buys and the sells has the equal, because definitely if you want to sell it, you must have a buyer. If you want to buy it, you must have a seller. So everyone understand this point, right? We need to be all the markets order, it requires a premium and discounts array to equalize it. So from here, after staying into a premium area right here, price indeed just continuing dump lower. First of all, in this range, price just this swing high is created. Okay, price this break of here, a breaker, and then leaving with a fair value gap as well. But we do see a potential fair value gap of 50-minute right here as well. So if we see this kind of situation, we want to make sure, is the price going to disrespect the premium levels or respect the premium levels, where the candle close something like this, 50 minutes already, right? Okay, so this swing high is a sweep instead of a closure below. So what do I see is price could just might disrespect this fair value gap as well, to then continuing lower. But if the price decide to close above this protected high earlier, it could just continue pump all the way to another all-time high, and this high will no longer protected. So now, why do if since we are bearish, we want to sell at as high as possible, right? But how do we identify? So now you know that the price potentially just continuing be bearish. So if you want it to be bearish, you need to get involved in a premium levels. So from here to here, the highs and the lows. You want to sell it as high as possible, right? The moment this candle range high is sweep, this 1 hour, I guess. Yes, this one, I think it's a 4 hour. Let me check. Okay, you want this swing high to be swept, and then continue lower. Here you see, you want to be this high, a swept, a sting in, but the premium price rejected off very strongly, where almost disrespect this fair value gap as well. So you want to sell at as high as possible within this range first. So the best you could do is sell above this candle open, so at a lower time frame. And to sell as high as possible, what you can do is within this range is you want to make sure the price is disrespect the bullish order flow. What you can do is with the Fibonacci tools. Okay, from 1 minute time frame, there is a fair value gap right here, right here. Let's see if the price could do something like this, just a sting in and then continue break lower. Now we see on a 1 minute time frame, you could see a lot of price action. But before we jump into the 1 minute, we definitely need to know the higher time frame direction bias first. Now let's see if the price just close above it and continue higher and created a new high again, then that's it. The selling momentum, sorry, the bearish market structure is going to be broken. Now we see. Well, any confirmation, we just don't trade it first. Hi, Joe.
别人听不到。
Sound check, sound check. Price is breaking the highs. Could just continue all the way to up here from this range. Be right back. Sound check. Okay. Okay, a 1 hour swing high, I think has been swept. Our swing high sweep. Okay, be a rejection. Something like this could be nice if the price decides to close below here. See for the other pairs. Seems like we had something on 1 more hour, 30 minutes. Looks like here we want to decide. This could be decent as well. Something like this. Swap this. Maybe targeting 1:2 maybe. Let's see if the price respecting this. So now currently we are at Euro USD. Okay, there is a huge 4-hour fair value gap resting, yes, resting right here, but the bearish side is actually being broken and disrespected. The moment where the price sweep of this high, a lower time frame is a break, already changed the market structure itself. Okay, so 30-minute value gap right here, potential liquidity low right here, so price could just stink and pump. Let's see if we can take a nice 2R trade from here. Now let's see. If this goes here, let's fail to close above here. Eventually, it's respecting all of it. Come on, I need some clear breaks on both sides. Okay, price is staying in the euro dollar. Price is staying in the liquidity levels right here from 1 hour time frame. Okay, 30 minutes fabricate right here. The fabricate respected off. Let's see if price could just close above this high, and we should go break even by that. This will be the first draw on liquidity. Eventually the full TP, if you guys want to hold it, could just hold all the way to here, because from here to here there is a couple of draw on liquidity right here and here. If the price just close above here, it could just continue all the way up within this range, so now let's see if the price gives us a confirmation. This our liquidity point is 5-minute structure itself. We drop down to 1 minute and see if price give us a signal that break above here with a confirmation or not. Possible, there might be a potential right here over at least to this low. Yeah, entry something like this, sting into it, and I want to see a very strong rejection, break over this and close above here. This would be the most ideal. Yes, this will be the most ideal highs we broken off to continue higher. Okay, a bearish fair that just close. So now we see if price respecting this discount area or not. Okay, consumer confidence in 5 more minutes. Eventually, this high has been a draw liquidity that price could just continue pumping higher. Eventually, this will be the draw on liquidity. Previous 15 candle, previous 15-minute candle low has been taken, and coming up next is this candle range high. It will be taken out. I'll be right back. Snakes. School. Consumer confidence in 1 more minute. Okay, the high has been swept. Fail to get right here. Expected. Ultimate draw on liquidity right here. If the price close above this range, it should just go all the way to all-time high again. On the Euro USD, yes, indeed, price respected liquidity levels filled in and given the fair value, and the price eventually just continue pumping higher. So well, definitely is a good tape reading on it, and whoever listened to this live, taken the actions, we do know we switch the buyers along the way. Yes, this is how the market show us. It could looks bearish at the time being, and it could just shift any single time that they want. We just react what the markets want to give us, and just be patient. Okay, let's see until give it a 10-10 maybe, then I will just end off the stream. Let's see if price just going to the all-time high, respecting all the levels or not. very well on the very well done on the euro dollar. As you can see right here, the price eventually respecting the liquidity levels, which is offering the fair values, sweep the swing low itself, rejected off the order block, leaving with a fair value gap, coming with the breakers, and then continuing higher. But swing low is the most discount that you can get involved in, but it is not advisable to straight away just stick into it, because I do have the higher time frame context. The bullish momentum is continuing higher from the 1 hour time frame itself. So from here, it's actually a bullish fair value gap right here, a sting in, after that causing a rejection here. So from 1 hour time frame, I dropped down to 5 minute, and then the first thing I saw after sting in the 1 hour time frame, I do see there is a BPR right here, a bearish ones, and a opposing with a bullish one, sting in and rejected off very strongly. So the next thing is, how do I get involved in to take this trade at a 2R trade? Price, it requires price to fill in a fair value. Price requires offering fair value or taking out a liquidity. So if price is not offering fair value at here, or this fair value gap as well, if the price fail to offer a fair value within this range, it will looking for liquidity. So where is the nearest swing low from here, which is this swing low? So this is the thought process of mine. After sweeping it, we didn't get involved in immediately. It will just take another one more push off here. From this trade, you'll push off here, place your stop loss right here. You can either aim 1:2. You have a better entry than mine. Second is, what you can do is just drop down to 5 minute of the 1 hour time frame. Just set a limit right here, like me, right here at 335, and yeah, this high will be our 2R trade off here. So all right, that's about it for tonight. So tomorrow I'll be streaming again and doing some live analysis as well. If you have any question, you can just contact our admin or find us, DM us at the Instagram, whatsoever platform that you want to reach out. So, and we'll be there for you for all education provided free. So don't miss out. Follow us down into the link, and we will just see you tomorrow. Bye bye.